Hello, I'm Ken Eades. I'm on the faculty here at the University of Virginia's Darden School of Business. I also serve as a moderator for the Strategic CFO Roundtable. The Roundtable is sponsored by the Institute for Business and Society, which is a center of excellence here at the Darden School. And I have with me today Jim Rallo. Jim's a CFO that's on our roundtable and has been for years. So we're glad to have you down here at Charlottesville today, Jim.
Great to be here, Ken.
So tell us a little bit about your company. You're at Liquidity Services. What do they do?
Right, Liquidity Services runs several online auction marketplaces. We sell surplus assets for large retailers, so things that are returned by consumers. We also sell heavy equipment for state and local governments, as well as the Department of Defense. We do work with many commercial companies as well, where we're selling surplus assets. These assets can range anywhere from trucks, cranes, to consumer electronic type of equipment, laptops and so forth.
What's the biggest item? So you have some really, you say heavy equipment.
We've
so
got some heavy
stuff.
equipment. Yeah, in the past, probably the biggest item we've sold is an entire refinery for one of our energy companies. But we typically have, we'll have large cranes, big sales of pipe for energy companies and so forth. These things go for millions of dollars every day on one of our websites.
And that's through the auction. That's online.
That's online. That's correct. Anybody is free to go on one of our websites. Wow. I suggest you go to liquidityservicesinc.com and you'll see a link to all of our different marketplaces and take a look and see if there's anything you're interested in.
So NASDAQ company, market cap $1 billion.
Yep.
Big company. So let's talk about an issue that's come up at the roundtable and take this down to Liquidity Services. And the issue is, we see this in the press quite a bit recently about cash balances at corporations, public companies like your own. And part of the debate is there too much cash sitting in corporations? So my question to you as CFO, cash, this is one of the things that you deal with, of course. How do you think about cash? How do you think about that strategically? How much do you want? How much do you have? And how do you think about this issue?
Well, I think first off, cash is somewhat of a high-class problem, right? So if you've got a lot of cash, it means you've got strong operating cash flow. We're lucky at Liquidity Services that we have a very cash flow positive model. Okay. So we do generate a lot of cash. And our job as corporate stewards is to deploy that cash that's going to drive the greatest return for shareholders. So I think there is a lot of talk out there of public companies today being cautious. I would say Liquidity Services is, we're certainly not cavalier, but we're not in the cautious category either. We're trying to grow our business. We're a growth company. So we're deploying cash to where we think we can drive the highest return for shareholders. But again, as a senior officer of a publicly traded company, conversations occur at the board level all the time. What is the best way to drive returns for shareholders? And that includes possible stock buybacks, which we've done on occasion in the past.
Okay.
It could imply dividends. We haven't done any to date. Or in our case, we use cash for a lot of acquisitions. So we've done hundreds of millions of dollars of acquisitions since coming public in 2007. We've done that mostly with operating cash flow, a small amount of debt on one of our transactions. But at the end of the day, we're trying to drive, as I'm assuming all public companies are, long-term shareholder growth. And so, when you look at that cash balance, what's the best way to deploy that today? And in some cases, that the opportunity to deploy that cash may be greater in the future. So I do think, people holding on the cash today probably see benefits in the future of doing that, obviously, or they would be returning it to shareholders.
But you have been investing. Your Liquidity Services high growth company, right? It's been recognized as a high growth company.
Yeah.
So it's not, so you've found the opportunities, plenty of investment there, but could there be a point where you have too much cash, or would you always have the eye on it, as you say, to maybe repurchase shares? Doesn't sound like you want to pay a dividend for your profile of a company. But.
Yeah, I don't think we're at the point of paying a dividend. Again, we're about $1 billion in sales, good margins and good profitability, but we just see a lot of growth in our sector primarily because we're really the only public company out there doing what we do. So when you look at the sales of surplus assets, especially in an e-commerce platform, there's no one else out there that's publicly traded, and so there's just a great opportunity to capitalize on, for us, a $150 billion market. So again, we're $1 billion in that $150 billion market. We've got a lot of growth looking in front of us, and We think we've got great uses for that cash today. So again, the cash balance today is approaching $100 million, which is good for a company our size, but it's obviously not $300 or $400 million where you'd think maybe we should look at some sort of special dividend or something like that.
Okay. Jim, I want to thank you for coming to Charlottesville and talking with us today, and also want to thank you for being part of the CFO Strategic Roundtable, and it was good to see you.
Great to see you, Ken. It's a pleasure being here. Thanks.